shameless cloners. Shout out Karan. Hey, it's Tom here and welcome back to the channel. So as some of you may know, one of the businesses I've been spending quite a bit of time looking into over the past probably couple of months at this point is Alibaba. We saw Monish Pabrai purchase into it, we saw Charlie Munger purchase into it, and we saw a handful of other super investors that are pretty well known and have very good track records buy into Alibaba. And anytime we're looking to purchase into a business and understand the value of a stock, particularly a fast-growing company like Alibaba, is we have to do quite a bit of work to understand just how much Alibaba can potentially grow. We are sort of inherently predicting the future every time that we invest in a business because the value of any business is the present value of its future cash flows. So we have to have some sort of estimate of its future cash flows in order to come up with a value. And there's been a couple of things that have kind of prompted me to get into a bit more detail on this just in the last day or so. So yesterday I was lucky enough to be a guest on the Money Under the Mattress podcast, which I will link down in the description below if you're interested in checking out that episode. And also just this morning I watched a video analysing Alibaba from Sven Carlin. And a kind of common theme between both that podcast and between that YouTube videos from Sven was kind of trying to figure out how quickly we think Alibaba can continue to grow out into the future. Historically, it's done like 40 or 50% a year compounded growth. That's unlikely, obviously, to continue forever. So we need to make some sort of estimate about how quickly Alibaba can continue to grow moving forward. Because if you look at it today, they have about 1 billion with a B annual active customers. They're close to a $600 billion market cap. So surely they're getting towards some sort of upper limit in terms of how much they can grow the e-commerce business. And when it comes to Alibaba, e-commerce is not the only part of that company. They have quite a rapidly growing cloud business. They also have about a 1/3 ownership stake in Ant Group, previously called Ant Financial, which owns Alipay, which is also an extremely valuable and pretty fast growing asset as well. But nonetheless, e-commerce still represents about 80% or so of the revenue for Alibaba, so it's going to be a massively important component of their future profitability, and it's a component of the business that we should really be doing a lot of work on to try and understand the remaining growth potential. Now, luckily for us as investors in Alibaba or prospective investors, if it's something that you're also looking into at the moment, is that Alibaba have been fairly open in sharing some of their goals for customer numbers in their e-commerce businesses. And that can allow us to kind of think through some of the potential revenue and the potential profitability of the e-commerce arm of Alibaba as well. So currently, as things stand, they have about 1 billion annual active customers, and the average spend from those customers is about 9,000 RMB, which is equivalent to about $1,400 US. Now, of that 1 billion annual active customers, about 800 million or so are located in China, about 200 million outside of China, and they've set a couple of targets. So the first target is to grow the China component of those annual active customers to 1 billion by 2024, so in the next sort of 3 years. And the other target that they've set is 2 billion annual active customers by 2036. So in 2036, which is obviously 15 years from now, they expect to roughly double their annual active customers. So that's going to be a really useful starting point for me as an investor to try and work through what that actually looks like in terms of revenue for Alibaba's e-commerce businesses in 2036, and also what that looks like in terms of a compounded annual growth rate. Because typically when I'm running something like a discounted cash flow style valuation, I'm really trying to figure out what's the annual growth that that business can achieve each and every year in order to continue sort of growing out their earnings and cash flows, and then discount that back in order to come up with an estimate of intrinsic value. So in order to get a feel for that 2036 revenue number, we really need to understand two things. So firstly, we need to understand the number of customers, which Alibaba have told us that they want to target about 2 billion. And the other part of that equation is how much is each individual customer spending. And this is where the range can start to get a little bit wider and things get really interesting in terms of what existing customers' experiences have been. So when someone first becomes a customer of one of the Alibaba e-commerce platforms, how does their spending behavior change over time? So do they spend more money in year 2 and year 3 and year 4 and year 5, or do they have sort of consistent spending? And how can we use that kind of information to estimate what the average customer might be spending 15 years from today? Well, again, luckily for us, Alibaba have been pretty open in sharing that type of information for what customers' typical experiences have been to date. So I'll put up a screenshot here. This comes from their 2020 Investor Day presentation done by their CFO, and they basically shared what the typical customer experience has looked like over the past 5 years. So when a customer first starts with Alibaba, these are basically their typical stats. So generally they'll have about 30 orders per year. They'll shop in about 7 different sort of product categories, and they will spend about 2,500 RMB. And what's really interesting is to see how that grows over time. And basically this sort of looks like a compounded revenue chart over time in terms of what the average customer is experiencing. So if you fast forward to 5 years later, some of the numbers are pretty mind-blowing here. So they go from ordering 30 different orders in a year to having 93 orders in a single year, shopping across about 19 different product categories, and growing to about 10,000 RMB in terms of their annual spend each year. So that's some really useful information for us to try and understand what the growth looks like between now and 2036. So I'm going to put up some screenshots here that I've done just on a simple compound interest calculator for the next 15 or 16 years. And firstly, we'll start out with the most conservative possible case. So let's assume that they hit that $2 billion customer number, but they have absolutely no growth in terms of the average spend. So the revenue exactly doubles between now and 2036, and that comes out at about 4.5% compounded annual growth. Now, of course, there's a chance that they don't actually achieve that 2 billion customer number, but at the same time, I think the chances that spending growth also doesn't grow over the next 15 or 16 years is a pretty small possibility. I think it's pretty likely that spending is going to grow if the future looks anywhere near like the past does in terms of what those new customers do as they start to come onto the platform. So that's kind of the first scenario I had. The second scenario I had was a little bit more aggressive. So again, it was doubling the customer numbers between now and 2036, but it was also doubling the average spend. So if you have two doubles, we're now at a sort of 4x in terms of the revenue of these e-commerce platforms for Alibaba. And again, if we turn that into a compounded annual growth rate, we're now getting about 9% a year annual growth over that time period. And finally, the last scenario I want to look at is if, again, we have a double in customer numbers, but now we have a 4x in terms of the average spend. So if we look at that chart like I was showing previously, that's kind of the typical experience of a new customer to Alibaba. Is they start out in year 1 spending about 1,000 RMB, and then in year 5 they're spending 4 times that. They're spending 10,000 RMB. So if we assume that they can achieve that sort of 4x, then we get the double, obviously, from the customer numbers. We get the 4x from the average spend per customer, and that gives us an 8x overall. So an 8x, again, in the compound interest calculator, comes out at about 14% per year annual growth. And again, something to keep in mind is that that average spend data is really only across 5 years. So if you have a customer come on today and they're on for 15 years, we really don't know what the spending is going to look like in 15 years. Presumably it's going to grow pretty aggressively for the first 5, like Alibaba have seen pretty clearly. I'd imagine it probably starts to plateau at some point, but I would be very surprised if it didn't kind of continue to grow after year 5. So I'm coming out at about 14% a year, like I say, if they can get the double in customer numbers and the 4x in annual spend. But there, I think, is a reasonable chance that it could be substantially higher than that. And in terms of starting to value the overall Alibaba business, this is kind of where I'm at the moment. So these are some of the factors that I'm thinking through. I think really the lowest growth rate that Alibaba can achieve is probably somewhere in the 10 to 15% a year range, because I think that these targets are quite achievable, firstly, for the e-commerce business, but also we haven't even mentioned many of the other growth drivers that Alibaba have up their sleeve. So they have a cloud business, they have Cainiao, which is sort of their distribution or logistics kind of network, and they also have their 1/3 stake in Ant Financial, which is an incredibly valuable stake even today, let alone what it might look like in 10 or 15 years. And the other interesting thing to keep in mind is that the more that the Alibaba e-commerce ecosystem grows, sort of like the Apple ecosystem in some ways, the more opportunities that arise for Alibaba to collect revenue in some way. And one of the most telling slides in order to kind of illustrate that point was actually this one here that again came from the 2020 Investor Day for Alibaba. And this shows sort of a typical profit and loss or income statement from a merchant using Alibaba services. And you'll see that right from the top line revenue for that merchant and right through the different costs that they have and all the way down to the bottom line, there are Alibaba subsidiaries involved right the way through. So all the way from the top line when they sell their products on Taobao or Tmall, for example, right through to sourcing the products in the first place, to distributing those products, to marketing them, to research and development and IT services. And there's just clearly lots of opportunity for Alibaba to collect revenue in some form or another. And there's also, like I say, this sort of ecosystem being built up where Alibaba have this sort of very holistic business offering for a merchant, and they have a really attractive platform for the customer because there's so many cheap and such a diverse range of products that I think they sort of slowly continuing to expand the moat, as a Charlie Munger or Warren Buffett might put it. So, fairly quick video today, but I hope that is interesting and kind of gives you a feel for how I'm starting to think through this with Alibaba at the moment. Will Alibaba continue to grow at 40% a year? I think that's highly unlikely, but will they grow at 10 or 15% a year just from their e-commerce business before even adding on top cloud and Ant Group and all the other things that Alibaba are doing? I think that's quite a reasonable assumption to make, frankly. So not intended to be a stock tip or investment advice or anything like that, but just something I thought I would share from my research. So if you did enjoy the video, please hit like and hit subscribe, and I will see you in the next one. Cheers.